Hi, it's Lee, and welcome to the Tesla Economist. All right, I'm sure you've all seen Tesla's earnings by now. And first off, not quite what we're hoping for or expecting, or at least for most people. I must say, I did do a great job predicting that revenue, though. I was only 0.8% off the actual figure. I think this was due to all the research I did with the pricing and factoring in the exchange rates. It was quite intensive. So I pretty much guessed the correct ASP. I even guessed the regulatory credits about right, too. But I admit my margins were way off. It would seem that Tesla are experiencing a bit more inflation than I assumed since Q1, but I think it sounds like there is still a large cost associated with running Texas and ramping up Berlin, and they're bringing down the average margins. Possibly the exchange rates too. Maybe some components are being purchased in US dollars. Although Tesla do tend to source everything they can locally, so I wouldn't have thought that would have been so major. Tesla say that the exchange rate cost $250 million, but I believe that might be on the sales side, not the costs. The other cost increases, they say, are from higher raw material and commodity costs and logistics. Then they also say that ramping the new factories is costing a lot. Aside from the factories, I actually have another theory as to why the margins are down. I remember we had a similar experience when they were doing the line upgrades with the Model S. Well, if you recall, we just had some major line upgrades in Shanghai for the Y and 3. I actually included this cost in restructuring in OPEX, but I think it actually might have been added into the cost of goods sold, which I'm pretty sure did occur in Fremont with the Model S. Including the downtime, this would have affected margins, and these were presumably large line upgrades, and this was for 2 factories. So hopefully that is where a lot of this margin has gone, although Tesla don't mention anything about this. Aside from that, all my estimates were almost spot on. I got energy and services pretty much correct, and same with OPEX. So I'm pretty happy with my estimates. But like I said at the time, I could only guess as to the margins of the new facilities too. They are still wild cards. I wouldn't worry too much for now. When they're ramped up, they will actually increase margins rather than lower them. It sounds like they're doing more to improve production in Fremont. Demand is just getting so high in North America, especially relative to the supply they have. So I'm sure they're doing everything they can, and we did hear they intended on expanding there. They also say the total number of 4680 cells produced increased 3 times in Q3, and the semi-truck is scheduled to start delivery in December. This was said in the same paragraph, so possibly they may mean the semi-truck will use 4680s? What I thought was interesting though, was the fact it says, we plan to introduce front castings and structural battery packs at Giga Berlin before the end of this year. In other words, in the next couple of months, Tesla will be manufacturing 4680 vehicles in Giga Berlin. This sounds promising. It doesn't say that the 4680 cells will be manufactured in Berlin, but we would assume so. Any potential on 4680 production is what matters the most. And Tesla still say they expect to increase manufacturing at 50% annual growth in vehicle deliveries, which we should expect really, as they are likely to be an annual run rate of 2 million by the end of this year, and 50% increase next year is only about 2.1 million. So hopefully higher than that if 4680s ramp. But they say this is all dependent on the supply chain still. They say we should expect innovations to keep reducing production cost and accompanied by software to increase profits, presumably like FSD, but possibly also software-locked 4680 Model Ys. And Tesla are making progress on the industrialization of the Cybertruck. All in all, I guess I was a little disappointed about margins, but it is early days yet. There's still so many moving parts, and in retrospect, perhaps I was overly hopeful. But I guess we'll discover more on the earnings call. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.